This is Chris from FXStrategy.com taking a look at the long-term charts for the upcoming August 29th week. As you can see, the euro dollar is banging on the door of the 145 level again as the Federal Reserve Chairman announced that the U.S. didn't need any stimulus, and even if they did, he had plenty of tools to combat it. That seemed to give the idea that there is a backstop in the markets again. As you can see, this recent trend line kind of has been broken, kind of. It's a rather messy chart, but as you can see, it all means the same thing. 145 seems to be an area that is of severe interest. Two hammers and a shooting star that's about to get broken above and blasted through. If we can close on a daily above 145, would send this pair much, much higher before it's all said and done. Looking at the Australian dollar versus US dollar, we kind of have the same type of situation where we have a shooting star and a hammer. The hammer was very supportive at the parity level, and the shooting star very resistive at 105 to 106. We closed the week just below the 106 level, and of course, if we can get above that 106 level on a daily, that would break the back of this resistance and should have this pair trading back up to 110. If we do not get that, then we may chop around for a little bit, but we do not feel that shorting this pair is very wise, as the trend is not only up, but fairly strong as well. The parity level needs to give way for us to even remotely consider shorting the Australian dollar, so a break above 106 is the more likely of the two scenarios and the one that we are presently hoping for. Daily close above that level, and we believe that 110 will be the next serious resistance. Looking at the Canadian dollar versus US dollar, you can see that we have tried to fall through the 98 level but haven't quite done it yet. This pair is held hostage by the oil markets, and essentially you're going to need the CL, the light sweet crude contract, to break above 90 to really propel this pair back to the downside. Break above 90 would be significant in oil, and it should cause great demand for the Canadian dollar. If the oil markets break the 80 support level, we could see a push above the parity zone, which I have about 50 pips wide, which would be a significant change in the tenor of this pair. So we will be watching oil so that we can trade the Canadian dollar. For FXStrategy.com, this has been a look at the longer term weekly charts in the Euro dollar, Aussie dollar, and dollar Canadian pairs.